This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Chinese refiners have stepped up purchases of Brazilian and West African crude as they reorganize sourcing around sanctions and tariff disruptions, and after prices of Middle Eastern grades surged. Tougher U.S. sanctions on Russia and Iran, as well as Beijing's new import tariffs on U.S. oil in response to duties imposed by President Donald Trump, have disrupted trade patterns and lifted costs for the world's top crude importer. China's crude imports from Brazil will pick up in the second half of February, and full-month volumes could hit 3 million metric tons, or 800,000 barrels per day, the highest in at least 8 months, said Vortex's senior analyst Emma Lee.
Oil prices edged lower on Thursday after an industry report showed a build in U.S. crude stockpiles and as tariff concerns weighed on sentiment, falling back from gains made in the previous session on worries over supply disruptions in Russia. Brent futures were down 22 cents, or 0.29%, at $75.82 a barrel by 0135 GMT. U.S. West Texas Intermediate crude dropped 30 cents, or 0.42%, to $71.95. The March contract expires on Thursday and the more active April contract eased 0.26% to $71.84. Oil prices held near a one-week high on Wednesday.
Moving on to the top news in the energy sector.
The European Union is set to suspend Syria sanctions related to energy, transport and reconstruction, according to a draft declaration seen by Reuters. EU foreign ministers are expected to discuss Syria during a meeting in Brussels on February 24. The draft declaration states that the Council of the EU has decided to suspend a number of restrictive measures in areas of energy, transport and reconstruction, as well as to facilitate the associated financial and banking transactions.
Japan Petroleum Exploration, Japex, is prioritizing investment in oil and gas exploration and production through 2030, revising an earlier plan to aggressively expand its renewables businesses, its president said. For now, the investment focus will remain on oil and gas exploration and production, as securing a fair return from renewable energy sources such as offshore wind is challenging due to rising costs, President Michiro Yamashita told Reuters in an interview on Wednesday. Other global peers have also scaled back renewables investments due to lower returns. At the same time, profits from oil and gas have soared since Russia's invasion of Ukraine disrupted supply and propelled energy prices higher. Next, we have the top news in metal markets. The European Commission is investigating whether to tighten its current system of quotas on steel imports to protect EU producers from new tariffs U.S. President Donald Trump plans to impose on incoming steel and aluminium on March 12. The European Union has safeguards in the form of tariff-free quotas per quarter and country for various categories of steel dating from 2018. They were designed to prevent a flood of metal exports being diverted from the United States to the bloc following Trump's metals tariffs in his first term. Trump has said the new 25% steel and aluminium tariffs will apply to all countries, canceling exemptions and duty-free quotas for major suppliers. The previous tariff for aluminium from 2018 was 10%.
Most metals rose as U.S. President Donald Trump signaled a new trade deal with top consumer China, while aluminium held steady at a one-month high on Thursday after EU envoy's agreement to ban Russian primary aluminium imports in the sanctions package. Trump indicated that a new trade deal with China is possible, noting that the U.S. once had a strong trade agreement with China and highlighting his positive relationship with President Xi Jinping. 3-month aluminium on the London Metals Exchange was up 0.6% at $2,703.05 a ton, as of 0417 GMT, its highest point since January 20.
We will now look at the top news in the agricultural sector.
Ukrainian sunflower oil export prices rose by $25 over the 7 days to Wednesday to between $1,110 and $1,120 per metric ton, carriage paid to, analyst APK Inform said on Wednesday, citing strong demand and limited offers. This situation is explained both by a similar trend in the world oilseed market and active demand for oil on the part of exporters against the background of a small number of offers of this product, the consultancy said in a report. Ukrainian Traders Union UGA said last week the country, which is a major sunflower oil producer and exporter, reduced sunoil exports to 340,000 tons in January from 526,000 tons in the same month a year earlier.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.